Hey traders, Raghee here. Over the last few weeks, we've been talking about a lot of big picture ideas like seasonals and the first of the year tendency for waiting for some sector rotation and bigger picture distribution market trends. Today, we're going to dial it down to a 5-minute chart and talk about something that works really well in chop when the markets are volatile but not trending as the indices are and many stocks and sectors are. And that's just doing some good old-fashioned day trading between 9:30 in the morning and 11:30 a.m. Eastern. Just those 2 hours. And that's the morning session between, of course, the cash bell, the Wall Street bell, and 11:30. The cutoff for me is when we start to get the wind down of the European session, when we start to see the volume and volatility contract in the U.S. as we go into the midday doldrums. That's when it's pencils down time. All right, so with that being said, let's talk about the NASDAQ. One of the things that I liked about the NAS that I really couldn't see in the Dow or the S&P, the other two major indices, is that by 10 a.m. we started to transition from what all of the indices were doing. The Dow, S&P, and the NAS were all in what's known as a double red. They were in downtrends. That's what we inherited on the bell. Double red downtrends. By 10 a.m., the end of the clearing, we started to transition out of that downtrend into more of that neutral. This is a neutral market structure. That's a much better environment to be looking for buys. And you might say, Rog, why would you be looking for buys if the market was heading lower on the bell? Because I'm not a momentum trader and I'm not looking to just follow the momentum. Sure, especially when we start running into layers of support like the hourly price movement range. Well, the setup that I want to walk you through is one that everybody can do. You don't need a fancy indicator or anything. It's just a good old-fashioned setup that I learned in the late 90s, actually mid-90s. It was a phenomenon that I noticed day trading cocoa back in the day. And so this is how it works. You wait for the first 30 minutes, and that's what we were measuring. From 9:30 to 10, you get your high, you get your low. All right, then you're looking for the market to break in one direction or the other. In the case of today, we broke through the upper end. Now, this is where, because it's just easier for me to be watching multiple markets, we just automated, hey, we broke in the high of the range. Nothing magical there. It's the high of the range. It's what's known as a clearing range breach. Then we look for what I call a retreat. Breach, retreat. It's a retracement, but breach, retrace doesn't sound to me as cool as breach, retreat. Okay, so that's what we call it, a breach, retreat. We look for that pullback into the Fibonacci zone. That's what this highlighted area is. See this highlighted little stripe? That's the highlighted area of the Fibonacci retracement of the clearing range high-low. And I look to buy in that area. And that's exactly what we got. Now, this was also a Jerome Powell morning, Powell, right? We had the FOMC, and by way of the chair speaking to the Senate Banking Committee. We knew we were going to get volatility starting at 10 a.m. after he was done reading his prepared statement. He was going to start to get peppered with questions. Volatility happens. So we knew that as long as we could stay above the clearing range low, we could stay bullish, and we were going to expect a little bit more volatility to the downside, so we stay a little bit more conservative. No problem. Got long on the NASDAQ. And, look, do we expect the market to have this kind of day? No. Initially, we just expect it to hit resistance levels where it's hit resistance levels before. Thank you, Darvis. That's the first target. That's, as we call it, T1, right? And then we see how much higher is high once we've moved to a break-even stop and taken half of our position off the table. That's good trading practice. That's exactly what we did today. And then, quite frankly, we just sort of levitated the rest of the day. All right? Not a bad trading day at all, but it all started with a simple breach, retreat. Check it out tomorrow. Neutral market environment, Fibonacci zone after 10 a.m. Hope that helps. It's something that I've been teaching for a lot of years, been using it for a whole lot more. It is just a classic setup. In the meanwhile, If you still have questions on those longer term time frames like we usually like to talk about in these sessions, join me for Charts and Coffee tomorrow at 9 a.m. at the Simpler Trading YouTube channel. If you've never joined us for that show, that is something we do Monday through Friday, starting at 9 a.m. Once you head on over to the Simpler Trading YouTube channel, you'll notice that it should be a link that's pending by about 8:45 latest, and you can join us live. The whole thing is done live, so bring your questions, bring your requests for symbols, and we'll tackle them one by one. We got a great group in there, tons of questions. Looking forward to seeing you there. Give me a shout out when you're there, and have a great day. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.